So I just wanted to say welcome again, as always, guys. Thank you for coming out on a Sunday afternoon. We know that you guys have other things that you have to do today, so we greatly appreciate your time. We greatly appreciate your attention, as always. And Austin, why don't you take it away for us today?
Yeah. So this is actually our first bi-weekly call of 2022, and we figured that we would do a topic that is kind of prominent and relevant to our our current situation in the market, right? And that is kind of around the topic of a market correction. What is a market correction, and how do we go about preparing for a market correction so you can make the most out of it and stay wealthy and healthy in these financial markets? So yeah, that's kind of what the topic is on today, and we hope you enjoy. But getting into slide one here, right? It's very important that we kind of define what a market correction is and kind of what a pullback is and what goes on to the downside during a market, right? So a market correction, technically speaking, is defined by a pullback in price from all-time highs by 10% or more, right? Believe it or not, we can have pullbacks below 10%, and those technically are not defined as corrections. But for today's purposes, we are referring to a correction as any retracement more than 10%. Corrections can take place in many different shapes and sizes, as we will go on to talk about. And so, today we'll be learning how to identify them, the different types of corrections that we typically see in markets, and how to best handle them with your individual portfolios. So, yeah.
Absolutely. And believe it or not, corrections are completely natural events. We talk about this quite a bit in chat here. And as a matter of fact, they are healthy in sustained trends. So at OBR, to identify corrections, we are mainly using technical analysis, as you guys know. News events and company reports can say one thing, but the only true thing that matters to us as investors and as traders is price action. That's really the only thing that we really care about. And by using our technical analysis, we can read exactly what price action is telling us to see, what kind of correction we are in, how far we can expect it to go, and much more.
Absolutely. Absolutely. And this is kind of what we get into of the different personalities and the different characteristics that retracements and pullbacks and corrections can all take on, right? As mentioned previously, they come in many different shapes and sizes. And it's very important to understand the difference in characteristics between these retracements as they will serve different purposes in the overall trend of an asset, equity, commodity, or index, right? So,
Absolutely. So getting into those, here's just a couple
this
of
is
different, definitions that we have to acknowledge. So while we are also referring to market corrections, we also need to define pullbacks, crashes, and recessions. So a pullback is a retracement in a market that is less than 10%. A correction is a fall from the overall market by at least 10% or more. A crash is a sudden, and emphasis on sudden, drop, which we have an example coming up shortly to show, of usually 20% or more from an asset's most recent high. And a recession is a significant decline in economic activity that lasts for several months or even years in some cases.
Yeah, and this, in my opinion, Logan, this was probably the most, intriguing part of this whole thing. Kind of understanding like the characteristics and what defines these different types of market retracements is quite interesting, right? And a lot of people often don't know that a correction is characterized by 10% or more, or a recession is characterized by a very consistent decline. Oh, I have an echo. Oh, I think I'm fixed now. But yeah, very, very interesting. Continue.
Absolutely.
Yes, and this is where we kind of get. Or wait, are you doing the first two
I
here?
believe I'm doing the first two.
Very good, very good.
Cool. So here is a micro correction example, which is actually the correction that we're just currently seeing play out in SPY as of, just recently on Friday. You see this bullish candle that we had was our close. So this micro correction is at the moment only 12.33% from our all-time highs just around 480. And then in this next example, we have a micro correction. Here's two micro corrections. And as you can see, the first one is almost 11% from all-time highs at the current time, right? This was back in history. And then again, we have an 8.88% correction from the just recent high that we made prior to that, around 355. This is also on SPY.
Yep. And as Logan just went into, those were micro corrections, meaning that they happened over a rather short amount of time and they did not exceed a certain barrier, right? They didn't see, or not yet, they did not experience those 30, 40% corrective levels. So those were very much defined and characterized as micro corrections. What we see here is what we'd characterize as a macro correction, and this is Tesla on the one-day chart. You can see that, you know, Tesla has been doing quite good over the past few years, but that did not stop it from experiencing some pretty significant corrections of upwards of 50%. So we can see back in March, back in early 2021, we saw Tesla correct. I can't see the numbers there, but it looks to be over 43%. And then we saw our most recent correction bringing us down. What's that number right there, Logan?
37.
I can't quite see. 37%. And these trends are very much macro because they took some time to play out, and they will be very significant in the lifespan of Tesla as a tradable equity on the stock market, right? These are very notable times and have shown to be big opportunities for investors in the market. So
Absolutely.
Yes, these are very much macro corrections.
I mean, I completely agree. You see, Tesla was on the left side up to 905, fell all the way back down to 570, a little bit beneath that. I would definitely describe that as an ideal buying opportunity.
Absolutely, especially with a solid fundamental company like Tesla, right? It's not going anywhere anytime soon. So when you see these corrections pushing 30, 40%, right, those are definitely good times to start accumulating if you're interested in you know, a company like Tesla.
Yeah.
It can definitely go down more, but typically, you know, the trend is your friend, history is on your side. Anytime that you're buying at these levels, it turns out to be a pretty good bargain.
Yes. And Austin, this left one, I would describe that as a crash because I would describe that as relatively sudden, right?
It could be, I suppose, defined as one. Yeah, sure. Yep.
Yeah, I mean, within a matter of, 2 months, we saw a 41% correction play out. But my question for you is, would you describe this other correction that we're currently facing on Tesla on the right side of the screen, would you describe that as a crash?
No. It was not a sharp enough decline. It took place over, you know, a good amount of time, and no, I would not say that this is characterized as a crash. No.
Yeah.
What it is characterized as a crash is what we'll be showing you in just a few slides from now, which is quite gnarly. And you know, me and Logan, when we were visualizing it, making these slides, we were almost laughing at it because we were like, can you imagine trading the market and seeing this happen? Like, we weren't alive during this time in the 80s when we saw this crash that we're about to show you, but it's quite seeing a market. You don't really know what a market crash looks like until you see something like this, right? This, what we're about to show you, is the real characterization of a market crash. But go on to the next slide. I believe we have one more in between. Yes. Okay. This is our next slide is we'll be showing the market crash, but this is another example of a macro correction. A lot of people do refer to these as a crash. What you're seeing right here is the pop of the dot-com bubble, as well as the 2008, 2009 financial crisis, right? In both times here, we saw over 50% drawdowns in the S&P 500 index, which, you know, a lot of people characterize as like the market is crashing. But in fact, these corrections took many, many months to play out and were, in fact, just a massive macro correction, right? And if you look at the S&P 500 index on an extreme macro scale, when you're observing like all 150 years of data, this simply looks like a classical ABC correction. And so, you know, with the time that it took to play out, you could maybe consider the 2008 financial crisis as a crash, as it was very dramatic, very impulsive to the downside, and happened over a much shorter period of time. But for today's sake, these would be classified as macro corrections. When we go into showing you the market crash, which Logan will talk about, that is what I would consider as a market crash. But this is just a great example of some pretty notorious corrections in the market that we've seen.
Yeah, and it's really interesting. It's like I just noticed a very weird fractal between this chart that we're looking at here and Bitcoin. If you've looked at that recently,
I know. You're gonna get me excited, my friend. Don't start doing that.
But Bitcoin looks almost identical to what we're seeing play out here. Looks like it's in the phase that we saw in the 2008 housing meltdown on the right side here.
Yep.
Yeah, so going into that example of a market crash, this is Black Monday, which happened in 1987. This was a time period where we saw the market fall over 20% in a single day. And that's what Austin was referring to.
That's ridiculous.
If you were trading that, you might think that the world was ending if you saw a market crash 20% in a single day. I'm not really sure when the last time we've ever seen that was. So definitely drastic. This was when the Great British Pound was decoupled with the U.S. dollar. There was a ton of short interest in actually George Soros's fund at the time. More short interest than the entire GDP of Switzerland. That literally caused the Great British Pound to collapse. And this is what the result happened was in our market index. So it was a very interesting time to be trading.
Right. And when you compare that, like when you look at something like this really speaks out to me as a market crash or a market capitulation, right? When you look at stuff like the dot-com bubble, like the 2008 financial crisis, right? Those played out over a much longer period of time than what we see here that just happened over a few days, right? So
Yeah.
pretty impressive what we saw in 1987.
Yes, definitely impressive. And then here is the crash in the Great, right before, right after the Roaring Twenties, rather. This is the Great Depression
Yes.
that we saw, started in 1929, ending in 1932. And as you see here, that was an 85% correction, which took, like I just said, the span of over 2 years, 3 years.
Yeah, and it took over a decade to really recover from that, right? And that was during a time of, a lot of, it's called the Great Depression for a reason, right? There was a lot of suffering when it comes to a financial perspective, especially in the American economy, right? And
Yeah,
so,
you
yeah.
debatably can't get a better image of a recession than to like this time period that we see here.
Yeah, no, that this is, yep, absolutely. Absolutely. Yeah, so we talked about what corrections are, the different types of retracements, kind of how they behave in markets. We've looked at examples. How do you go about protecting yourself, right? What kind of risk management do you employ to go about protecting yourself in these markets? Once you identify that a correction is playing out, your game plan should in fact become much more clear, right? When in a downtrend for long-term investors, there will be a stunning amount of discounts to purchase into, right? As we said, if you bought into Tesla during those downtrends, right? Tesla's a very strong company. It provided many strong buying opportunities. So it's not only beneficial for long-term investors, but it's also beneficial for the short-term traders, as there will be lots of times to ride that volatility in short positions, to kind of take advantage of maybe some impulses to the upside during the corrective wave in the downtrend. So there's a lot of opportunity for both investors and traders. The most important thing is to make sure that you are financially prepared to handle a correction. A correction, if properly capitalized on, right, that's in parentheses because it's very, very important, can make you much more money than a sustained bull run, right? And this was a little thing that me and Logan were talking about. Logan, do you have any thoughts on that? How if you properly capitalize on a correction, how that can be very, very beneficial to somebody?
Absolutely. And I think the example that we just had in Tesla was a prime
The
example.
best one. The
Yeah,
best
because
one.
when we're talking about making money in a correction, while you can make a good bit of money buying puts or riding things short, the majority of your profits, I think, in a correction will be buying things at heavy discounts. So, like Tesla, we were just talking about, you were seeing it at 570, drop all the way down around $200 discount, right? So, already there to get back up to all-time highs where price was averaging prior, that's almost a 100% gain on equity. So times like that, you can locate severely underperforming assets and buy into them at heavy discounts to make a very large percent. And I think that that is where you make a lot of the money in a bear market or a correction of some kind, rather than riding things short. Even though you can make a lot of money doing that, you can obviously do the same thing in a sustained bull market. The big profits are going to come from buying things at really, really large discounts. Cough,
Yeah,
cough, Bitcoin.
yeah. And Tesla's just Tesla's like the best example we could have used, because even during that market correction, right? I know we talk about technicals a lot, but no fundamentals changed for Tesla, right? Tesla was the same company when it was at all-time highs than it was right when it was corrected down 30-40%. So it's like seeing these discounts can provide massive, massive opportunities for long-term investors that are interested in such equities. So.
Yeah, so continuing with our risk management, you should be looking to scale out of your longer term positions once we identify a correction. That being said, we want to do that namely when we're identifying a macro correction and sitting on a portion of allocated cash in your portfolio. This allocated range of cash can range anywhere from 30 to 70%. And this cash will be used to make sure you are not eating too much downside as your portfolio loses value, and will also allow you to capitalize once the moment is correct to re-inject those funds into the market, like we were just speaking about. That is a big part of risk management in a pullback. And our main goal in the markets, as I'm always telling you guys, is to protect our lifeblood, which is our capital. Don't hold on to positions hoping for them to go back up when we are in a clear downtrend. Scale out, be patient, and capitalize when the time is right. This is the time to be patient, to sit on your hands, and wait for the right moment to pounce.
Absolutely. And then obviously we talked about there's different ways of handling these corrections, these retracements, and these pullbacks. And there's different strategies to doing so, right? especially in the stock market or the equities market, right? Obviously, a lot of us here like to play options. We like to buy, right, to the downside. We can buy puts. We can utilize covered calls. We can buy leaps on an equity that we have faith in. We can buy calls once the correction has concluded. And we can also play a fear and volatility index as a hedge, such as VIX, right? Something that goes up when the market is going down and there's a lot of fear in the market. When it comes to an equity standpoint, scaling out, like Logan just mentioned, scaling out of equity to buy back lower can also be an option during times of, very bearish price action. You know that something, you're confident that something is going lower. It's always okay to kind of scale out of your position and look to buy back lower. Having some dry powder on the side, having some fiat on the side, as right, if you guys don't know what fiat is, that is just our dollar bills, like the US dollar, a euro, etc. Having that on the side, having like 30 to 70% cash, as Logan said, to re-inject into the market when the time is right, is huge from an equity standpoint. I believe we do have some. Oh, never mind. And then obviously, when it comes to how you're going to be holding your equity, how to protect yourself, having a little bit of portfolio diversification will never hurt anybody. Oftentimes, a little bit, you can have too much portfolio diversification and that will limit your gains. But at the same time, there is a flip side to that. It will protect you to the downside. So that is obviously a strategy to handle the longevity of the market, right? Because markets will have correction, guys, and having a diverse portfolio will mitigate the effects of said correction. Also, as we said, having fundamentally sound investments with a strong foundation is always a good idea when you're doing long-term investments with equity, because typically, even during market corrections, if these companies are strong, they aren't going anywhere anytime soon. As you said, Tesla, the fundamentals did not change from Tesla when it was at all-time highs compared to when it was down 30-40%, right? So investing into something that's down 30-40% with strong fundamentals can often be a great bang for your buck. So yeah, these are just a few of the strategies that you can utilize to help better yourself during a market retracement or correction.
Yeah,
and then I want to note one more thing. If you bring your eyes to the bottom left corner of the screen, we have a little fun message for you there. Hodl, right? It works. It works sometimes, but yeah, go ahead.
And it's worth bringing up psychological and emotions of a market retracement. In bearish times, seeing your portfolio lose value rapidly can induce emotions, which is completely normal. We are humans at the end of the day. In these times, it is imperative to try and view the market objectively. Understand your strategy and understand how you will handle said correction. That will give you confidence, and that confidence will ease those emotions that you're feeling. Be patient, have a game plan, and execute accordingly.
Yeah, viewing the market objectively is the most important thing that you can do. And here we're returning to my trusty Wall Street cheat sheet. I don't even know who's actually responsible. Okay, wallstreetcheatsheet.com. Shout out to them. I've been using this chart for like 3 years now because it perfectly describes the emotional and psychological effects a trader or investor will be feeling during the duration of a market cycle. As we said, corrections and retracements, pullbacks, crashes, capitulations, recessions, they're all normal within a functioning market, right? And with those normalcies come very prevalent emotions, right? And we can see that during that big uprise, during the run to all-time highs, we see the optimism, we see the belief, the thrill, the euphoria. But what comes to the downside, right? It's about managing your emotions. We see complacency, you see, oh, this is just another cool off, right? We're getting ready back to it. But then you start getting hit with the anxiety, the denial, the panic, the anger, the depression, and even the disbelief. It is very, very important to recognize these emotions in your community, right? On Twitter, right? Twitter's a great way to judge emotional sentiment in markets. Even in your trading group here at OBR, I often will know kind of how the general market is feeling from a psychological standpoint. But it's very, very important to view the market objectively and kind of block out these emotions as much as possible. Right? Even though you may be feeling them, remember that markets do not just go up. They will have crashes, corrections, and pullbacks. And just kind of acknowledging the psychology of it is very, very important and will go a very long way in your journey as a investor or trader. So if you guys want to find access to this visual, just go online on Google or Bing. I know sometimes I use Bing. Don't hate me. But just type in market psychology chart or whatever, and this will pop up right away. It's very, very good to kind of look back on. Even if you've been trading for a very long time, this sheet can often be a great thing to reference and simplify the situation at hand. So, yeah. Yeah.
Yeah.
Logan, I know you like this chart as well.
Yeah, absolutely. And we were talking about earlier that there's a lot of opportunity to make a lot of money when the market is bearish, and this chart actually just points that out. If you look at the right side of this, on the upper hand side, it says in the trough is the point of the maximum financial opportunity in a market cycle. So that's exactly what we were talking about earlier.
And that's when everyone is kind of given up, per se, right? The depression stage has kind of kicked in. Yeah. So
cool. So now that we know how to identify a market correction, we know about the different kinds, we know about different strategies. Now we have to know how to prepare for the reversal or the next move higher. And when looking for a correction to end, we are utilizing multiple tools to show us the confluences for a corrective move ending. And we are namely looking for bounces of support or the completion of a technical corrective pattern. As you guys know, we do use Elliott wave theory for that. And the main thing we need is we need to confirm the end of a correction by a bullish impulse move from the downside to the upside. And here we will begin to look for our more macro impulse moves to the upside. And this would be the time to inject that allocated cash and other strategies we were discussing prior.
This is just such a great point, right? Like, when it's all said and done, how do you go about recognizing these reversals and knowing when a correction is done or when a correction is beginning, right? It really all comes down to your due diligence on the market and your analysis on the price action, right? Obviously, fundamental analysis is huge. Knowing on what's going on in the world is huge. But technical analysis is the real way where you're going to be like, okay, this is when I'm going to start entering back in. This is when I'm going to start doing that, and so on. That's a whole nother book. We have many educational videos on technical analysis. As Logan said, Elliott wave specifically is how we kind of go to recognize and visualize where we are in a market cycle. Technical analysis is huge for preparing for a reversal and preparing for the downtrend, right? And that is a kind of a whole separate topic, but we're more than happy to kind of take questions on that here in just a moment.
Absolutely. Perfect timing.
Yeah, thank you guys for joining up and listening to our little thing that we had here. We really appreciate it, and it was fun. But now our time is up. We now kind of want to hear from you guys. If you guys have any questions on the topics that we just discussed, whether they be more specific, more generalized, it really doesn't matter. Any question that you have, we are more than happy to try and answer it. But if there's no questions, right, that's fine too. We don't want to force anybody to asking a question. That's never any fun. But we welcome it. So speak up.
And I'll also go through now and just unmute everybody who was muted. Oh, somebody already did that for me. Thank you very much. So you guys can unmute and ask us your questions or shoot them into live chat VC mute.
And if you guys don't know what live chat VC mute is, if you're new here for some reason, it's just the chat right above voice chat. You'll see it if you just scroll up a little bit on Discord. Is right there, right above where you joined.
Hey gents, great presentation. Thank you for doing that. I just had a quick question. I'm relatively new to watching the FOMC calls, and so I'm just curious if you all have any input on what you think might happen to the market after the tapering and the interest rate hike.
Yeah, so I think there's a few different ways to interpret this. I think a lot of because a lot of people are expecting rates to be moved up, right? They're expecting negative news from the Fed, and I think that a lot of this could be baked into the market as we speak right now. That's perhaps kind of what we're seeing right now, because you have to remember the FOMC meeting that just happened recently. There was really no negative news that came out, right? And we still saw the market, kind of want to push further to the downside. So obviously, when they come out and they announce that, we're raising rates, I do expect there to be some fear in the market. I do expect investor sentiment to not like that. But nonetheless, right, they've been talking about this for a very long time, and they have FOMC meetings all the time, right? What you should really boil it down to is you should try to block out all that noise and try to acknowledge the market as objectively as possible, right? Don't let the thought of them just saying, hey, we're raising rates, talk you out from buying a wonderful buying opportunity in the market. Does that kind of make sense? So it's tough to say, really, and it can be interpreted a bunch of different ways. Logan, do you have any thoughts on the FOMC meeting and rates being possibly raised here in the future and kind of how the market would react to that?
Yeah, and you did say you were new, so something that I'm always talking about is I personally believe, and I will die on this hill, that technicals lead fundamentals, meaning that the technical analysis that we do bakes in, like Austin said, it kind of shows what's going to happen before it even does happen. So while I am curious about the Fed raising rates, I'm hearing a lot of different rumors of if they even are going to raise them. I think they are. They did plan 3 this year. So like Austin said, that's most likely going to cause some uncertainty. But I do think that to some extent those interest rate hikes are going to be already priced in by the time that they are, unveiled for us. But again, I'm just going to be following price action because price action tells me all I need to know.
Absolutely. Yep. But it's good to definitely don't just ignore the FOMC meeting, right? Like even I myself will listen to Powell talk, and I'll listen to what they have to say. It's significant, but yeah, don't give it too much. Don't give it more power than it needs to have.
Right.
Yeah. Great question, though. Great question.
That was a very good question.
Yeah. Yep.
So,
anybody else?
Yeah, we have one here. So what do you guys think about the current situation in the market? I know it won't do a straight up V like what it did previously. With all the news with Ukraine as well, how will this affect the market?
Well, it could do a straight up V.
Right? It definitely could.
But Logan, you can go ahead and answer. I have my thought. I don't know if you were getting onto something there. Yeah.
Well, I want to just reference the second half of your question with all the news with Ukraine as well. I think that we honestly have no idea what's going to happen. I hear a lot of people saying that we could be on the verge of World War III, and I don't know how real that is, but it's definitely, in terms of fundamental news to be aware of that we don't have baked into price action, I would say that this is definitely the most important thing to be aware of. What's happening with Taiwan and China right now, what's happening with Russia and Ukraine. If there is one aggressive side, this could be quite bad for the overall global economy, not just the U.S. economy. But there's no real way of identifying from where we're at right now whether something's going to happen. It really depends on if somebody makes a move. Right now, it's just everybody's kind of at a stalemate, but there's definitely aggressors in this situation, and we need to keep an eye on that. With the current situation in the market, I think that could, obviously that situation could drag us down farther. The price action, what it's telling us right now is that we are coming down farther, and it will continue to be that way in SPY until we break back above 456.70. That's the level in which we would have to reanalyze our bearish market sentiment. But right now, the market is definitely leaning bearish. But again, there's nothing saying that we can't do a V-shaped recovery like we did before. We're just leaning into our probabilities right now, and our probabilities say that it's coming lower.
Right. Yeah, I was going to say that, with all this fundamental news going on, with all this concerns about, like we said, rates, possible war, right, with over in Eastern Europe, the technicals that a lot of the analysts here at OBR, especially me and Logan, we've been we've been acknowledging that there is definitely more room for some downside in the market, right? I think what are we at right now? I think from our all-time highs to our bottom, we're roughly over around 12% correction so far. So, I mean, we could definitely see another push to the downside. We could, see upwards of a 15 to 20% correction in the market, which would mean, thankfully that most of the bleeding is done with. But when it comes to a technical aspect and fundamental aspect, there is definitely reason to believe that we could be going lower. Doesn't mean that we have to, but it's definitely the probability is kind of leaning that way at the moment.
Yeah.
Yeah.
Hopefully that answered your question. Any other questions?
We encourage you guys to, if you want, you can use your mics.
Yeah.
Or you can type. Doesn't matter. But
yeah, that was a really great question, though. I'm really curious to see what comes out of the situations that we're currently facing. It is a bit weird.
It could be a bunch of FUD.
It could be a bunch of FUD. And that's what we have to hope for sure.
Right.
Just for anybody that doesn't know, FUD is fear, uncertainty, and doubt.
Yes, yeah, fear, uncertainty, and doubt. And there's definitely a lot of that in the market, and it's definitely FUD happens kind of when markets are going down, right? When we see a bunch of red candles, FUD will increase because the fear, uncertainty, and doubt levels in investors and traders goes up dramatically. And also from a technical perspective, not only does the wave counts that we have right now look rather bearish, Logan, but you have to remember from that run that we saw from the COVID capitulation back in March of 2020, we went on a multi-year pretty much without stop bull run, right? To see a 15-20% correction right now would make a lot of sense in my eyes, but it doesn't mean that needs to happen.
Right. Like we said in the beginning of the slideshow, corrections are healthy in sustained trends. So,
Absolutely.
like you just said, we have had a sustained trend for quite a bit of time. So seeing that retracement would make a lot of sense.
Yeah, and even in a macro sense, right? Like, in order for a market to stay healthy over long periods of time, it needs to correct, it needs to crash, it needs to have a recession, right? That sounds horrible to people. Like, nobody wants a recession, but over the next 100 years of the American economy, will we experience a recession-level event? It's likely. It's likely, right? But inevitably, when you zoom out and look at the whole picture, it's just going to be a blip on the radar that led to a higher high, right? So these things are all perfectly normal in human emotion, human behavior, and a market that humans participate in. As long as humans are participating and active in this market, we will see these crashes, capitulations, pullbacks, retracements, and recessions. Yeah. So.
Cool.
See, there are a few people typing, so we'll give you guys a moment to do that. If not, you know. Nick 3, Chewy calls over 44.20 looks really good. What do you think about the setup? Yeah, I mean, it looks all right. Obviously, we'd have to see a breakout from said resistance, but yeah, it looks good. It does look like it is trying to perform some kind of reversal pattern. It kind of gives me hints of inverse head and shoulders, but not. It isn't really performing something like that. It would be kind of a Libra pattern. But yeah, it looks quite good. If we see a breakout, a confident breakout, then that might be a great opportunity. So, Blue Anubis, yeah, we are, I don't like to use this term, but we're kind of crackheads with our technical analysis, right? So you're probably, if you do participate in OBR, a lot, and you spend time in the chats, you will see a plethora of charts every single day. With every trade that's taken, with every time that we're in these live chats doing our thing, we are always kind of referencing some kind of visual and some kind of ideology behind our theses, right? Whether they be bull, bear, or neutral.
Almost every day.
Almost every day. Yep. Saturday is the one day where we kind of unplug.
Yeah.
And that's necessary, right? Saturday, you should at least have one day a week where you do not concern yourself with financial markets. Unless you're about to lose your ass, then maybe you should concern yourself. But it's good to, keep stuff mentally healthy. You don't want to overwork yourself, which a lot of us are guilty of doing, and that's okay. Hunt says sometimes Saturdays. Yeah, sometimes. Yeah.
Cool. Well, if we don't have any more questions, I guess we can wrap it up.
Yeah, that was a good time. I had fun.
I had fun as well.
Yeah.
Cool. Well, yeah, if you guys have any other questions, shoot them in here. Anytime, we're happy to answer them. Again, thank you so much for coming out on your Sunday. If you guys are going to go watch some football, enjoy your football. Again, thank you.
Yeah, and if you guys do want to go and rewatch this for some reason, if you felt the need to go do that, go Bengals. Hey, I'm with it. I want the Bengals to win too. If you do want to rewatch this, these will be posted on YouTube.
This one will be up there by tomorrow night at the latest.
Very good. Very good.